Interesting, of course, some of the reason for the issuance, Sarah, had to do with deal making. And I guess one of the things that it raises is whether this is the end of the cycle frenzy, right? We've got to get this done. So now we're issuing stock instead of buying back. Do you buy into that rhetoric at all?
Exactly. That is the big question here. Now, I will note that sometimes the math surrounding this is a little bit hard to gauge. The way that you can look at it is to use the numbers as a lens to kind of discern a trend. So it does look like we did see a shift in trend in May. That is the truth of the matter. For the first time in a long time, we did see supply meet demand. However, we also have to remember that as you start getting into the summer months, we typically see seasonality regarding buybacks die down. Deals can be another story, but the fact of the matter is that this is something at least to keep an eye on. If buybacks weren't already enough of a hotly debated topic, well, now as we see the market climbing once again, close enough to those all-time highs, if you're starting to see these supply-demand dynamics shift, that could be an issue, or it's something to at least note.
Like in the sense that it's removing the buffer that if you thought that companies would provide price support, then how worrisome is this?
Exactly. And we have seen times in the past where we have seen either a slowdown in buybacks or a pickup in buybacks, and we've seen that coincide with market price action. For example, if you look at February of last year, Volmageddon, for example, at the time that we saw the S&P 500 bottom, it was the same exact week that Goldman Sachs' corporate trading desk actually saw its busiest buyback week ever. So whether it's a coincidence or not, that companies are buying back a tremendous amount of stock, and you see the market bottom as well and bounce back. Same thing in the past month. If you look at price action of May, of course, we're dealing with negative sentiment regarding tariffs, regarding trade, but it was the worst month of the year. We saw nearly every single week of May in the red, and at the same time, we saw corporate buybacks and also deal takeover. That dollar amount declined by about 60%. So investors can take that into account when they decide whether or not it's a coincidence or not. But we have seen the two kind of match up.
And of course, Sarah, the through line for the last few years with low yields is that there's a ton of corporate cash, right? Records amounts of corporate cash sitting on balance sheets. Do buybacks remain one of the most popular ways to handle that cash?
It still seems so at this point in time, but you have to ask yourself the question, if corporations are looking at the valuations of their own stock and they are seeing extremely high valuations, do they want to buy back stock at this point in time? Or would they rather go about issuing cash or doing something and deploying cash a different way than buy back stock at extremely high valuations? And that's a question at this point in time. INTL FC Stone put out a report last week really asking this question, saying at this point in time, the stock market is hugely dependent on corporate buybacks. And if corporations start to step away from repurchasing shares to the extent that we have seen, because we have seen such a pickup over the years, I believe Goldman Sachs estimates it to be $420 billion on average annually over the past few years or so. If we see that slow down because corporations don't want to buy back shares at these levels, then you have to question what's going to happen going forwards.